You know that feeling when someone shows up for you just when you need it most? That's what Uber is all about. Not just a ride or dinner at your door. It's how Uber helps you show up for the moments that matter. Because showing up can turn a tough day around or make a good one even better. Whatever it is, big or small, Uber is on the way. So you can be on yours. Uber, on our way.
Reality radio for a really great future. We're talking real money.
Do you know why they call Black Swan events Black Swan events? It's because they're incredibly rare. And there's no way to know when you're going to sight one. And that's what we're in right now. This is absolutely as black a swan as I think I can remember. Because we have so many forces working against long-term investors that it's hard to stay invested. Hi, I'm Don McDonald. Welcome to Talking Real Money Daily. And while this is not something we normally do, I want to spend a little time for as long as this extreme volatility continues trying to put this in perspective. And I'm going to keep it short today because I don't need to rant and rave and carry on. You really know what you should do, but it's hard to fight that emotional core of your brain, that top of the spinal column primitive brain that says, run away now. Well, you can't run away now. Maybe you could have run away if you knew that this was going to be as bad as it's appearing it's going to be, the viral thing, the global pandemic. But you can't know that. And now that we're down to a level, well, actually, let's see, the S&P 500 is right about where it was 3 years ago. Correct, 2017. The Asia Dow is about where it was 4 years ago. Bonds, though, bonds are holding up well. High-quality bonds, not junk, but high-quality bonds. The Vanguard Total Bond Index is up over 2%, or has returned more than 2% year to date. So there are bright spots, but they're not very bright. So bonds are up a little. Stocks are universally down. There's no real safe haven. There's no safe haven. So what do you do? What do you do? Well, as I've said over and over again, what you should have done, and if you haven't done it, it's time to do it. What you should have done is built a portfolio that was created to take into account the blackest of black swans, the worst events. And I say it, I've said it over and over again in classes. If you cannot stand and you are not 100% certain you will not make any changes to your portfolio except for adding to stocks, when the market declines 50%, you shouldn't be in stocks. And I illustrate that by saying, imagine you have $1 million sitting in front of you on the table, and I walk over and I take away half of that pile. Now, you've listened to me for a while, and I've said I'm going to bring it back. I'm really sure. Unless I'm hit by a bus, maybe then I won't. But probably someone will bring it back to you. More than likely, you're going to get it back. Odds are great, but you don't know when. You know, it's very likely, close to 99.9999999% likely, that you're going to get it back someday. You just don't know when. So how do you feel in that circumstance? Rarely have I talked to anyone, even in a good market, and we tend to lie to ourselves in a good market. Rarely have I spoken to anyone who has ever said, oh, I'm comfortable with losing half of my money. Well, folks, you're down about a third. If this is scaring you already, because it could get worse, I don't know. The problem with the future, we can't predict it. if you're really uncomfortable with your stock position right now, this is not the time to sell. This is the time to properly balance and allocate your portfolio for your tolerance for volatility. If you think you can lose it all, you should think again. Do you really truly believe that COVID-19 is going to end up with a world that looks like The Walking Dead? And if you haven't seen that, it's a time when only a few people who are normal are around and almost everybody else is a zombie. If you really don't believe that's likely, then you have to believe that it's very likely, very, very likely, that what is happening right now is temporary. It is based on fear and based on traders' uncertainty. Traders, stock traders. They want to be rewarded and well rewarded for facing uncertainty. So right now, that risk premium in the stock market is really high. Think about it. If you bought stocks today and we just got back to where we were at the beginning of the year, that's about 25 to 30% return. That's a pretty hefty premium for facing uncertainty. So get it right, and get it right now. And don't succumb to all of this, and don't watch the news much, and don't watch the financial news at all, and don't do anything. You don't have to do something. I know it's like, I got to do something. You don't have to do anything. What should I do? Don't do anything. Don't do anything, please. And this is going to be a relatively short podcast. I'm going to sneak one call in here because I'm working on a brand new emergency class, because I felt I had to do something, that will be taking place this coming Friday, online only, totally safe, no exposure to a virus, and there are only 100 seats. I know right now we've got about half of those filled, so if you want to attend this class Friday at 3 p.m. Eastern, noon Pacific time, go to talkingrealmoney.com to sign up. That's talkingrealmoney.com. You can also send questions in there if you're concerned. If you want to talk to an advisor to get yourself calmed down, no obligation, no cost, no sales pressure. Just go to talkingrealmoney.com. You can send your question in there or whatever. And give me a call, 855-935-TALK, 855-935-8255, 24 hours a day, 7 days a week. And let's go to a call.
Hey, Don. I was listening to a couple of your recent podcasts, and I just thought I'd call in just to give a couple additions to some information that you provided to your listeners. Recently, you mentioned about Lively having an HSA, and that is the no fees and what have you. Just another addition to that for your listeners, Fidelity, I think last year launched a similar no fee HSA, basically to be in competition with Lively. But anyway, I wanted to mention that because if people do have accounts of Fidelity, they could, use an HSA through them as opposed to having to, go with another company in addition to one they might already have. But there's nothing wrong with Lively. It's good. But Fidelity also offers a no-fee HSA as well. So I thought that was important to mention. And since you said you weren't real, familiar with a lot of the, plans and companies and providers and that sort of thing. Anyway, the other thing I wanted to mention was you had a caller, I guess a little while ago, who was asking about his TSP, and he was mainly concerned about if his ex could get any of his assets from his TSP. And you answered correctly that, if it wasn't a condition of his, divorce, then no, she has no claim to it. And that's correct, but I think it's also worth adding for your listeners, and maybe even for that listener, to make sure that he checks on who his beneficiary of his TSP is. Because if he didn't change it after, since he got divorced, then, when he dies, his money could be going to his ex, and that may not be, what he wants. And a lot of people forget to update their beneficiaries when they have a major life change, like a divorce, or something else. So I just thought I'd mention that it's maybe something, to mention when someone has a divorce. Check your beneficiaries on your life insurance, your 401ks, your IRAs, your pension plan, and make sure your beneficiaries, your money's going to go to who you want it to in the event that you should die, because you may not want it to go to the person who was previously listed as your beneficiary if situations have changed. Anyway, that's all I wanted to offer. good show, and keep up the good work. Thanks.
I really appreciate your call, and I really appreciate the fact that you did my job for me because I have an overtaxed brain right now. So thanks so much for doing that. And if you guys have something you want to add to the show, call it in to 855-935-TALK or send it in via the contact form at talkingrealmoney.com. If you're worried, if you're scared, if you're looking for some perspective, join me on Friday, the 20th of February. The 20th of February. If you're listening to this podcast after that, the class is over, although we may have others. Just go to talkingrealmoney.com to sign up. Just hit the events, go to the events page where it says learn. There's a guy pointing at a blackboard. Click on that, sign up. There are only 100 seats available. Once we get to 100, we're done. We may have to have another one later on. And don't miss it because it's going to be helpful. Thanks so much for listening. Please tell a friend or two or 1,000. Subscribe to the podcast on your favorite podcast service. And we'll talk to you again, well, tomorrow. Really, we got to be here. We really need to get together every day, don't you think? So thanks again. I'm Don McDonald.
Talking real money. We hope you realize that the information provided on Talking Real Money is for educational and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately and consistently predict the future. So past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Vestry, a fee-only registered investment advisor. Thanks for listening, and please visit talkingrealmoney.com for more information and disclosures. That's a wrap.